This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we've packed a number of shows together to give you some highlights. I know you're going to enjoy the show. Thank you for being with us today. Our guest is Charlie Stevenson. Thanks for being on the show, Charlie.
Yeah, thanks, Whitney. Appreciate it. Pleasure to be here.
Yeah, honored to have you on the show. Charlie and I have met at a few different conferences, and looking forward for him to be able to share his story. And a little about him, though, in case you haven't heard of him, he's a serial entrepreneur. He started several businesses in the U.S. and Europe in the marketing and adventure travel industry since his university days in Boston. He switched into real estate after realizing that he could generate passive income and scale more easily, allowing him to travel the world, spending time with his family, and focus on what matters most. After making the industry switch, he founded Acris Capital, which has been syndicating and acquiring multifamily properties across the U.S., building a portfolio with nearly 500 units valued at over $60 million. He's now committed to bringing the freedom he found in syndicating real estate to others, helping them break free from the constraints of time, money, and unfulfilling jobs. That's where we all want to be, right, Charlie?
That's it. Yeah. Thanks.
Yeah, thanks for being on the show, Charlie. Give us a little more of your background. I'd love to hear a little more about the story. I know you briefly talked about it before we got started recording. So, give us a little more of your background. That's anytime any of us make a big swap like that, I did the same thing. I mean, it's obviously such a big decision, big leap of faith. And I think it just speaks volumes to just the listeners as well, and we'll encourage them. So get us started.
Yeah. So I was always really passionate about travel and grew up in Washington State. My parents were big kind of backpackers. We go spend a lot of time exploring the mountains and the lakes of the Pacific Northwest. And as I got a little older, I started to want to get out of my own little backyard and start exploring the world more. So I going out to Europe for a little while, where I founded a adventure travel business that brought American study abroad students on trips around Europe to ski in the Alps or go down to Morocco or sailing in the Mediterranean. And it was just a really amazing experience for me. And so I always really loved travel and entrepreneurship and building businesses from scratch. And after that business wound down, I moved back to Boston, where I went to college and was in the corporate world for a little bit in the travel industry. And I met my wife, and she was in the finance industry. And we both kind of realized that working in the corporate world, while it paid well and seemed really glamorous, we weren't traveling as much as we wanted to. We weren't out spending time with family as much as we really valued. And so on our honeymoon, we vowed to quit those jobs and go and travel. And we had no idea at the end what that would look like from an income perspective or anything. We just knew we wanted to maybe start our own business. And so we traveled for about a year and a half and just had an amazing kind of transformational experience, a lot of growth, a lot of exploration. It was a lot of challenge too, but just a lot of real highlights. And it was about halfway through the trip, we were riding the train across Siberia up in Russia, the Trans-Mongolian. And a good friend of ours from Christina's former job was joining us. And we were talking about what we were doing after we were done, which was like 6 or 8 months out. And we were kind of like, boy, this condo we have in Boston which we had rented, has been generating cash flow for like the last 6 months and supporting our travels to some extent. How great would it be if we had like 5 more of these? We wouldn't even have to return and find another job or something. And our friend was like, yeah, silly. Like, this is what I've been doing since I graduated from college. She had owned a couple of multifamilies in the Boston market. And at that moment, we were just kind of like, light bulb, let's turn this into something bigger than just a single condo. And at that point, we decided to begin building an institutional business that married my entrepreneurship with my wife and my other partners' experience in the finance industry as traders and portfolio managers. And that's what became Acris Capital. And we began acquiring multifamily apartment buildings, once we returned. So that's the whole long and short of it. And
nice.
The whole thing was we wanted to be able to continue to travel, continue to spend time with our family, and this business is a means to that end. And we've gotten really passionate about it as well. So that's where we are. It's been fun.
Wow. So it's neat that, I hear a similar story often where somebody just had a house, they had to rent it out because they had to travel, they had to go somewhere else for a job or whatever it may have been. They were forced to become a landlord. Then all of a sudden this light bulb came on, right? It's like, wow, I'm actually making some money here. And they, wasn't even counting on that. Never dreamed of being a landlord. And then it kind of opened their eyes to this bigger picture of real estate. Sounds like that's what happened to you.
Yeah, same kind of story. And luckily for us, the landlording was really easy because it was a fairly new construction, and so there wasn't a lot to do. And we, learned a lot in that experience, and that we wanted to have assets that were fairly easy to manage. And that, we learned that kind of the hard way, I would say with our first couple of acquisitions. But now we've really dialed that in. Having assets that cruise along, just like our first, new build condo in Boston, so we can truly have it be a passive concern for us.
So, I guess, so why syndication? So like you could have just stayed with condos. You could have, got to that 5 condos like you were talking about, or started flipping, homes, or just more single family rentals. How, there's numerous different ways to get into real estate.
Yeah.
So why syndication?
Yeah. So business was what I studied in college, and from day one, operations class 101, they drive into your brain. You need to gain economies of scale, get as much leverage out of the systems and processes that you build. And our first acquisition was a small 5-unit multifamily that was built in 1900. And of course, it didn't have any on-site leasing management, didn't have any on-site management offices, anything like this, because it's just a tiny little multi. And we realized how much work it was taking to manage just 5 units under one roof. And one of our mentors at the time said, look, you guys have the smarts and the ability, like, go bigger. You're going to gain economies of scale. Having that on-site management office is a game changer, and it'll make managing your 5-unit be the same amount of effort to manage your 5 unit as it would be a 50 or 100 or 150 unit. I don't know if that's exactly the case, because there's a lot of different complexities, but certainly there's some truth to that kind of comparison. And so the ability for us to ultimately scale the business, and then it allowed us to go a little bit bigger, a little more quickly. And then our investors really enjoyed that kind of predictable passive income that we can provide for them. And the deal structures are really nicely structured to protect them and align our interests with them. So I think for all those reasons, we really like syndication as our kind of vehicle to invest in multifamily assets.
Nice. So yeah, so somebody just really turned you on to it, right? I mean, like you're figuring out that, hey, this is a lot of work to manage this 5-unit property. And I think until you get into it, or until somebody kind of opens your eyes to it, you think, well, why in the world would I want 100 units when this is this difficult? Right.
Truly.
You don't think about the economies of scale, like your friend was telling you. But and I was going to say too, a 1990 property, I know that's pretty common in the Northeast, right? A property that's built in the, real early 1900s. I mean,
yeah.
1900s.
Right.
Yeah, I couldn't imagine that, but that's so common, up the Northeast. So, but tell us a little more about maybe your process just in getting into the syndication business. I know a lot of listeners could relate just to your process and being stretched really from, say, a 5-unit to even thinking about doing a larger transaction, a much larger property. There's just a lot of confidence that has to be built there, a lot of things to learn, but you do have to you have to take the step and make it happen. So you walk us through that a little bit.
Sure. So I would say a really kind of important inflection point for us was attending a conference, actually, where I think I first met you out in Denver a couple of years ago. We just went into it to explore and observe and see what all these different syndicators were doing. It was fairly a new idea and a concept for us. And we attended a lot of the different kind of sessions and spoke with a lot of the different groups that were there in attendance. And we met one team who we just really had a great connection with. We felt like we were on the same page from a mindset perspective. There was just an instant kind of click, and we began to really invest in getting to know them over time. And over the course of the next year, as we built trust and kind of better understood each other, they and a little on them, they are an operator and a syndicator on numerous kind of large assets in the Southeast and Southwest. And so we were a little bit honored just that they were giving us, the time of day. And but they kind of took us under their wing and let us, kind of ask any question that we had. And we really just valued that and continue to value that relationship, because they really showed us, what pitfalls there are and what we need to be careful about, and how we can build kind of processes and systems around each of the different components of syndicating an asset like this. And so that built a lot of our confidence. So we began participating with them as a member of a general partnership on a couple of their syndications that they were the lead sponsor of. And in the course of that time, we built our confidence and understood how our earlier experience operating smaller multifamily properties had similarities and differences with the larger assets. And that helped us to kind of identify the gaps that we had, which we really intentionally began to fill over the kind of intermediary period between then and now. And so we built kind of the confidence to go out and seek our own multifamily asset to syndicate.
That's awesome. No, that's awesome. And it's just a great way to get into the business, right? I mean, find an operator who's been doing it, been around the block and back, and you just learn so much by being connected to that individual. So did you mention how you initially got connected to that person or that group?
Yeah, it was through a conference that Joe
right.
Fairless runs.
Okay.
Out in Denver.
And so tell me though, because this question is often too, like everybody wants to find that group, right? Like you did, wants to find that individual that's going to mentor them or take them under their wing a little bit. And that's difficult. Like I understand now too. It's just, like there's so much happening. I can't answer every question, or I can't, allow everybody to work with us and I know other operators that experience that, but you want to help everybody you can. So how did you, but adding value to that person is so important. And how did you do that? How did you kind of get this person's attention enough for them to be really your all's mentor for a time, or maybe even still, what did that relationship look like?
Yeah. So it started off with kind of taking a little bit of a risky move and introducing ourselves to them. They were paneling in one of the discussions at the conference. And so my partners and I identified some of the different people that were paneling and some of the speakers and reached out directly to them, which was surprisingly easy. And those that responded, we sat and had breakfast or lunch with. Those that didn't, we just, hoped that we'd meet them again at another time. And once we met that individual or the two individuals on that team, we just kind of let ourselves and our experience kind of bring a little bit of credibility. And they liked the way we were approaching the market in a little bit of a different way. They liked that we were pretty authentic and just candid as communicators, and let them know that we had vulnerabilities and were willing to learn. And as the relationship began to grow, we put systems and processes in place to grow it. So every 2 weeks, we met with them and had a conversation. We set expectations early on about what we were looking to do and trying to understand what they needed. And we learned that, my kind of strategic and marketing background could help to influence certain things that they were still figuring out. And then my other partners kind of underwriting and understanding of larger, trading and portfolio management could help them to influence their underwriting models and strengthen their underwriting models. And so we found out where we could bring value to their team. And of course, they could bring a lot to us through their experience as experienced syndicators at that point. So we just found where there were gaps within our organizations and just began to share resources and ideas. And it's been that kind of simple formula has been really great for us and for them as well. I think we're all growing more because of it.
I liked hearing that you all were proactive. You went out, you seen who was on the panels, and you reached out to them. You didn't care how many said no, but you focused on the ones that said yes, right? And that's incredible. I mean, it's taking that step, and I find that most won't do that. Most people will, they say they want to get into this or they're interested in real estate, but they won't take that step to even connect with somebody that they feel is ahead of them. And I would say that person probably doesn't feel like they're much further ahead of you, but you visualize them as being that far ahead that you don't want to reach out, but you should. You should reach out.
Yeah.
So I like how,
absolutely.
anyway, you all just reached out, you set up a time to talk, and no doubt that's paid off. And so tell me about some growing pains since then, maybe a growing pain that you all had and how you overcame it.
Yeah, I think so. As we began getting our confidence as operators, we began to go out and explore new markets apart from our first market that we had been introduced to with our partners down in the Southwest. And we found quickly that it's a lot about the relationships and the infrastructure that you build on the ground in these markets, especially with the deal providers like the brokerage houses. And so, it began with us calling a lot of the brokers who have access to the larger 100 unit plus deals. And when you get a random phone call as a broker from a firm you've never heard of and you don't understand how they're capitalized, you don't know what their experience is, maybe there's a website they can visit, but when you don't have a local body of experience, they're less likely to give you their attention and certainly less likely to bring you a really valuable value add multifamily asset. And so what we did to kind of overcome that was we really worked to build on-the-ground relationships with local investors and syndicators and developers who had those relationships with the lenders and the brokers in that market, so that we could get a little bit of credibility from, those pre-existing relationships. And then we also really did our best to convey our fit and our the fact that we had the experience to be there, and we had the credibility to acquire and close on one of these larger multifamily assets just by flexing some of my other partners' experience in the finance industry and Wall Street, and some of our experience starting multiple businesses. So really just trying to convey our credibility in a way that was humble, but also very direct, but also bringing other local relationships into those new kind of brokerage relationships that we're building. So that's how we kind of overcame it.
It can be so scary to take that first step into a new venture. It can be so scary to put maybe all your life savings into this new thing. Man, you have big hopes, you have dreams, you want to make things happen, but you're going to risk everything you have possibly and then lose it. But if you do lose it, what's the worst that could happen? Our guest today is going to talk about just that. Man, he's going to talk about that scary first step, but what he did, he and his wife, and they put everything up to make it happen, to take that first step. He's going to go through that. He's helping many other people to do the same thing now. He's going to help you think through, man, what's the biggest fear? What's the worst that could happen? But also even masterminding. He has a mastermind. He's going to talk about the importance of that. I hope that you've heard that many times on the show now. If you've not thought about a mastermind or joining one, I've been a part of many. I would encourage you to look into joining a mastermind. There's something about being around a group of guys or gals that are motivated and high achievers. It just brings you up in many ways, and it will also allow you to help other people, right? You'll be able to bring them up in ways that you're an expert. Jay, welcome to the show. Honored to have you on. I know you're good at helping people make that first scary step, right? I mean, it is scary, no doubt about it, right? It is so scary, but we all had to do it. And then often we have to continue to choose to make that scary step.
The first scary step, yeah.
That's right. That's right. Sometimes that fear doesn't go away right away. That's for sure. And so welcome to the show. Give the listeners a little more about who you are, maybe your business model, some real estate ventures you've been in. Let's dive in.
Yeah. Whitney, thank you for having me. I've kind of sat on the sidelines, envious of what you've done with your podcast. So it is an honor to be here and in front of your audience and whatnot. And so that first big scary step, I still go back to that first property that we bought, and I sit down with my wife, and it was a $25,000 purchase. And I'm sitting down with my fiance at the time, now wife. And I'm like, what if we buy this? Excuse me, she was my wife at the time. Let me get that timeline straight. But we were sitting there and I was like, what if we go bankrupt from this? We were living paycheck to paycheck. And it was just one of those things where we felt like we were taking the biggest plunge of our lives. And at the time it was. And it's so funny. You mentioned, that those first scary steps. I think those first scary steps should always continue to happen. And I kind of feel like maybe I'm addicted to them. I don't know. I don't know if I have a problem with that, but it's almost like I don't want to compare myself to somebody who goes skydiving for the adrenaline rush, but it's one of those things where I enjoy getting into that first step kind of scary thing with new ventures. And so that kind of leads me to the question you asked is kind of our background. We started in single family, quickly moved to small multifamily. We had maybe 3 doors in our portfolio, and we GP'd our first syndication. From that, we've been an LP and joint venture. As of most recently, we've done some short-term rentals and started doing some note investing. So full gamut of investing. And that's one of the things I love about real estate investing is you have so many different avenues you can go after, right? And so many things you can do. But when it comes down, if I look at our returns, so far, the multifamily deals that we've been a part of have provided the best returns. So I don't know why I'm drifting away from that other than just my own curiosity.
Help us though to break through that first step, Jay. It is so important. I would elaborate, man, you and your spouse are on the same page moving forward and making this kind of investment. And I mean, it's so crucial if you plan to continue, and no doubt about it. But help us break through that scary first step. What do you see? I know you're talking masterminding with a lot of guys and gals who are, and maybe, they're struggling to break through, or maybe, syndicate that first deal, or, even maybe they're trying to buy the first single family rental, whatever it may be. What are some of those simple steps you're like, okay, or questions maybe you ask them to help them get started?
Yeah. And to help them get started is, hey, what's your biggest fear? Right? What is your biggest fear? And a lot of them come down to it. Well, I'm going to go bankrupt, just like me. And I'm like, all right, let's talk about the possibility of that actually happening. Right? And so we walk through these different scenarios, and it's all about handling objections. And this comes from a sales background that I have. And also, I tell myself a lot of different stories, right? As I'm sitting down thinking about different investments and thinking about different opportunities throughout the years, I will sit there and I'll tell myself the worst case scenario that could happen, and I'll freak myself out, right? And then I'll open up and share with my wife. She goes, well, that's kind of absurd. When does that ever happen? When is that going to happen? And the likelihood of it not happening is very rare. But as being, the head of I would say head of the household, the father, and, the protector, provider, presider, if I can steal Ryan Mickler's tagline there for our family, it still falls on me, or I feel like it falls on me. Right. And so that pressure does. So I'm thinking of all these different things. And something I've learned over the years is risk is always going to be there, right? You cannot eliminate risk, but you can make a really good educational guess based on what you know and what other people who have gone before you know. That's where kind of coming into the power of the mastermind is you don't have to do this alone, right? You don't have to. There are people out there like you and I who have gone a little bit further than a newbie. And there are people who are out there who have done a lot more than you and I that we lean on, right? And the real estate investing community is one of those. I am so amazed at how much people want to give back and help others get in the business. It's incredible. Like, I don't know why we do that, because we're basically training our competition essentially, but we do. We help them, right?
Yeah.
And so the biggest thing is, identifying the risk, but then walking down that path and saying, okay, how big of a risk is it? Right. We just made a change on one of our insurance policies. We had a $2,500 deductible on $1 million property. Okay. $2,500. That's not very smart. Now, if your risk tolerance is very low, it's very smart. But with the way the insurance prices are being adjusted these days and going up, it doesn't make much sense. And our risk tolerance, along with our partner's risk tolerance, has changed a little bit. So we bumped it up to 25,000, right? Lowered our premium tremendously. And it's just one of those things where, okay, it's $1 million property. There's 6 of us. If we can't come up with 25,000, if it's not in our reserves, then there's a bigger problem. You know what I mean? So it's about walking yourself through those stories of worst case scenario and realizing chances are they're not going to happen.
Yeah.
They're just not.
I know a couple things that I had to think through when we were getting started and making that first big decision like that. It was like, okay, if we do go bankrupt, which obviously you hope doesn't happen, but man, but still, what's the worst that could happen? Even if we lost our home and everything, you still live in America. Most likely you still have a family member, somebody that's going to let you sleep in the basement for a few weeks, right? You're not going to be like out under the bridge. It's most likely. Right. More times than not, even, we, like you said, we just think the worst. Right. And we dream this big horror story up in our minds. Right. And it just puts so much fear in us. I'll give you an example. My grandmother, she's 94, and she's always so fearful of me losing a bunch of money. And I bet, she lived through the Depression. Think back, when she was little, man, they really had nothing, and lived on dirt floors. It was like really hard time. And so I try to share with her every once in a while, when she says something like that, I'm like, even if that happens, which obviously we're working our hardest to ensure that it doesn't, right? We understand our risks, all those things. But even if it did, I'm still like starting back where I began before. It's not like, I still gained a lot, and think about all the knowledge and the network and the people and all the learning that's taking place, even if worst case scenario happens,
Yeah. One of the things about bankruptcy has always scared me until recently. And I don't know, it's one of those things where if you embrace your fears, are they really that fearful? Or are you really that afraid of them? And I keep telling myself the story, what's the worst that could happen if we ended up there, right? If we ended up there, and it's not going to happen just based on one investment. It shouldn't, right? And we're to the point now where a lot of things got to go wrong for that to happen, unless I just continue to increase my risk tolerance. And then I would wake up one day and be like, oh crap, what was I thinking? Right. But that's probably not going to happen based off of Mr. Conservative here.
But what are the risks if you don't try, right? If you don't take this?
Yeah. Well, and this goes back to part of my story as well. So May 1st, 2020, I know the date because I now celebrate it as one of the better, not up there with wedding anniversary or birthdays, but one of the best days of my life is I got a call from my boss, and he said, hey, I hate to do this to you, but with this COVID stuff, we've got to make some cutbacks. And unfortunately, you're one of them. Right. And, that hit hard. I was not expecting it, total out of left field. And at the time I was running that sales team, and over half the sales team got let go as well. So they're all calling me, hey, what are you going to do? What can I do? What are you going to do? And I was like, well, you know what? I'm not going to do anything. what do you mean? Like, how do you not have your resume already ready? I was like, well, first of all, we just had the conversation 30 minutes ago with my boss. It's like, secondly, you guys know I invest in real estate. I said, I've been investing for a while. We're comfortable now. We're comfortable to the point where I don't think I'm going to go back to the W-2 world. At least that's where my head's at. And they're like, how can you do that? Like, I got to find a job. Will you be a reference?
That's too scary.
Like, yes. Yeah, it's too scary. And quite frankly, I was like, you know what? You're right. It is pretty scary. I was like, but I don't want to find myself in this situation again. And talking about those scary first steps continue to happen. It took me about a year and a half to really stop looking for another. Like, I put on that face for those folks because at the moment I was there, I was like, you know what? This is what we want to do. And then as we transitioned, because it was a 6-figure job, right? And one of the things when I got out of that, my wife came to me and says, hey, now that you don't have a job, this is like 5 minutes after I told her what had happened, right? She goes, well, great. Now we can go travel, because she's been wanting to travel. I was like, can we let this sink in just for a minute? Like, let's figure out how we're going to pivot financially and whatnot. And so it took a year for me to warm up to it, but that's kind of what we're doing now is we've been traveling for the last year. Matter of fact, June 18th of 2021, we left our house. We've been back 2 months out of the last year. I'm in a hotel room right now. We're just doing the whole Airbnb hotel. We had an RV that we lived in for about 6 months. But yeah, it is scarier not to do something, right? And just to rely on that one stream of income source, because I would have been like those other folks who most of them I've checked up on them because I was pretty close with my team. They've job hopped. They're on their second or third opportunity since, in 2 years. And here I am. I've probably closed more deals in the last 2 years. Let me think through that before I say that. Yep. Than I have in the 2 years prior to that when I had a W-2. And we've done it all remotely, traveling around. We've hit up the East Coast pretty hard in the last year. And it's just been incredible. And we wouldn't be able to do that if we wouldn't have made that first scary step. Right. And which led to the next first scary step being buying our first $25,000 property. Next big scary step is buying another, like a duplex. And then the next big scary step was, hey, let's GP a deal. We don't know anything about apartments. I don't like asking people for money or, helping them ensure they see this is a way for them to earn money. I don't like that whole conversation. I can underwrite a deal, but I don't like talking to people about their money. Because growing up, you mentioned your grandmother, growing up in my household, talking about money was voodoo, man. And if you didn't have cash to pay for it, you didn't need it. You didn't need it. My dad still drives around town once a month to pay his utility bills in cash.
Wow.
Now, I'm glad he's getting out, but man, he doesn't own a checkbook, doesn't own a credit card.
Yeah. Well, the problem is if you never are willing to take any risk, well, nothing changes for you, right? I mean, you're stuck in this grind or in this place you're in, and you have to be willing to step out, or you're definitely not going to succeed further than where you're at now, or maybe where your friends are, or that, if you're not willing to do something different than everybody else. Right. Yeah. And so I want to shift gears just a little bit, Jay. And I know you host a mastermind, you've been a part of a number of masterminds. I have as well. And so I think the listeners, you said this before we even started recording. It's like a lot of people don't really understand what a mastermind even is, or what happens at a mastermind, or why they're so important, or, it's like, or how I even find one. Right. And so talk through that a little bit. You're more experienced at masterminds than I am, especially hosting one. And so talk to the listener a little bit about, what is a mastermind and why should I even pursue being a part of something like that?
So Napoleon Hill, who I credit as being the godfather of mastermind, he gave us the definition. It's 2 to 3 people coming together, a minimum of 2 to 3 people coming together to talk about and engage on a like-minded subject. And I think this last part is probably the most important. Engage on a like-minded subject in a positive manner, right? And so masterminding is just a group of people getting together. Now there's ideas on the best format or whatnot, but they're kind of all over the place. And when you go to look for one, I was looking around and trying to find one for me. And so by nature, my personality type, I'm an introvert. Now I'm growing out of that, losing the W-2 and traveling around like we are. I've kind of starting to grow out of that a little bit, but I did not want to meet people in person. I had worked for remote like 10 years before I got laid off. I was very comfortable behind a camera and a keyboard, and that's what I wanted. And I couldn't find one. So that's why I started the one I host now. But point of me telling you that is masterminds are the structure of them are kind of all over the place, right? And the pricing of them are all over the place. And so you made this comment earlier when we were talking about this, is that you travel enough right? So you don't necessarily you're not in a mastermind currently or whatnot. And there are masterminds where you have to go maybe either once a month or once a quarter to a destination where you're going to sit in a conference room with other folks and you're going to hash things out, right? There's also ones that meet maybe on a weekly basis just in your town. And then there's also like the one I host that is completely virtual, right? So we meet on Zoom. We've got over 20 different virtual calls a month. And it's just getting around like-minded people who are going to not only give you ideas of what to do next, but keep you accountable, right? And that's the biggest thing is the accountability, because in the way we structure our calls, we talk about big wins. We get everybody excited. We're starting to figure out that produces a lot of shiny object syndrome, because somebody will come in and talk about how successful, they just closed this self-storage facility and the returns, and, how the one they closed a couple months ago, how it's producing returns. And so everybody starts shifting to, oh man, I got to check out self-storage. And then somebody will come in and talk about multifamily investing and the returns they're getting on it and the capital they're raising. You're like, oh man, I got to get me some multifamily, So you got to be careful with that. You got to be really sold on your goals, right? So you don't get that shiny object syndrome. But we talk about big wins, and then we have just a Q&A session where the Q&A session, basically you ask a question. Anybody who answers has to answer based off their experience, right? It's not they're answering, well, I read this in a blog post or I heard this on a podcast. No offense, Whitney, but when you're in the mastermind, when you're in the confines of the mastermind, there is no answer that starts like that. And members call you out. I will call people out. People have called me out. So tell me more about your experience. I didn't know you've done that before. I'm like, you're right. I have not. Or you're right. Let me walk you down that path for a minute. And then we ask, for some accountability items. And so the next time we meet, that's one of the first things we talk about is, hey, how did you do? You committed to doing this thing last time we met. Did you do it? And there are people who will show up sometimes 15, 30 minutes late to one of our calls because they get to the call time. They're like, crap, I didn't do my thing. I got to go do my thing because I'm not showing up to the call empty handed. You know what I mean? So it's one of those things that the accountability is key. So, and the other thing I'll mention is price. So you've got like location, right? You've got the format and then the price. And I would encourage everybody to join one that is going to stretch you just a little bit financially. And, everybody's situation is different on what they can afford, but something that's going to stretch you a little bit financially because you're going to take it that much more serious, right? If I join a gym membership and it's going to cost me $1 per month to join, how many times do you think I'm going to go during that month?
You're going to forget about that dollar.
Probably not a whole lot. But if it costs me $100 a month or what, I don't know what gym memberships are these days. I tend to do just push-ups and sit-ups and play around with the kids, right? But, let's just say it's $100 a month. Then I'm going to get reminded every month when I check my bank statement, damn, I should have went and worked out. And chances are the next day, I'm probably going to go work out, right? So join one that's going to stretch you just a little bit financially and also make a commitment. Is it a year commitment? Is it a 6-month commitment, 3 months, whatever the case? Because personally, I found out when I can set parameters like that, then my mind gets in a different place. Because then my mind goes, okay, well, this is just a business trip. This is just a business project, right? I'm going to do this for 3 months, 6 months, or a year. And then I'm going to reevaluate, come out on the other end of it and see, is this something I want to continuously do?
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.